Good day here and happy weekend, folks. Bruce with Targeted Wealth Creation back at you. Okay, I'm slowing down a little on my Sunday evening. It's still your Sunday morning, but I've been building this today and I wanted to get it out. So, YieldBoost from Granite Shares, who I've interviewed Will before and probably will again. Has asked for and could be launching, they've gotten approval and could be launching a lot more of their funds very soon. And as you know, a new competitor coming into the space has been Roundhill with its single stock weekly payers. The news from Granite Shares, what happened to this? Let me Granite Shares has announced that their small amount of weekly payers, which are shown on the sheet here, will be converting as of 6/1 from monthly payers, even though up here I said Granite weekly dividend single stock. They've been monthly, okay? And I've got the distributions listed out here in that scenario. There's your TSly fund. It got started in, when did it start? Let's go over. Launch date was 12/18, and they came out 6 days later, and they paid almost 5 cents, 4.6 cents. Then in January they paid 74 cents. In February they paid $2.54. In March they paid $1.539. In April they paid $1.04. They're getting ready to pay on 22 of May. It's either declaration or pay. I forget which one. Now, what I was trying to do is do some comparisons to some of the other funds here that they have. And these guys are monthly, but they launch later. So they only have March and April. So let's jump in here. I'm going to talk on a strategy sheet down here at the bottom in a minute and talk to you about what's the difference in YieldBoost. But just to tell you right off the bat, so they've got a TSly fund. It's launched since 12/18/24, just like YieldMax. TSly was one of the very early funds. So I'm going to take you through the strategy of the fund. Then I'm going to take you in a comparison. I'm going to compare Kurv's fund. Let's see who's in that. Kurv's fund, Roundhill's fund, YieldMax's fund, and YieldBoost fund. Okay. And the underlying. That's something we don't do enough of. Because, we all, oh, yeah, I know the underlying outperforms. Well, sometimes the income fund can beat it. Doesn't happen very often in total return. It's never going to beat them in distribution, right? Because it doesn't pay anything. Maybe one day these will, but high growth tech stocks don't pay dividends. All right. So let's get back to what I want to show you here. So here's a launch date. Here's the inception price. We go through. We took $1,000 as an example, and current price $12.96. It was $12.43 a week ago. What changed? Here's the gain or loss in dollars. Look at the distributions, right? I talked to you about these guys, and this is a 80. Whoops, is that right? I don't think that is long enough. 5 times 30. No, this number is flawed. I need to fix this number. This would equal this date minus launch date. Yeah, I've jumped around here on a few of these and messed them up because I was copying them in the comparison. That makes more sense. Okay. So total return is negative, all right, on this guy, which we don't want to see. But remember, I have to go with when they launched, and they took us right through. Let me make sure the prices are accurate on all this stuff. I don't know why this gets messed up sometimes, but I did a lot of bringing data over. That looks good. let's get historical. Was it 24-26 when it launched on 12/18? It in fact was. Okay. So, and that's not uncommon in TSly. Um, because it got beaten down, as you know, with a lot of the political situations and people hating on Elon Musk and Tesla shares and his attention on other things, whether you love him, hate him, whatever, nonetheless. And it looks like the stock has been rebounding lately, and all of that stuff gets reflected in that scenario. Nice distribution. Now, I'm going to talk about it in a minute, how they differ and how they write their options and even what they write it on. They write it on a leverage the 2x underlying, right? TSLL by direction. So very volatile tool that they're using. Okay, and they're selling puts, and I think they set up a synthetic as well. But I'll show you in my notes in a minute. I've gone through so many different ones here today. Um, this is their other current. They have a crypto, a BTC oriented fund. Look at this, 513. You don't have any time to even get paid distributions out here at this point. So there's nothing there. These two launched, and they're the ones that are 81 days. So these guys launched a TQQQY. They're on top of a 3X, okay, um, QQY type of fund, right? And then and then YSPY is their spiders fund. And so you can see in here distributions. Um, you can see the drawdown, right? Their SPY is less than their Qs. Um, and these aren't something that have performed very well if you take the last 81 days. If you hadn't noticed, we were in a bear market and now we've come back out of it. But when you launch right at the height of the market, these things have not really recovered. Obviously, this one's recovered better, their SPY, but they're using leverage and they're writing, and they're going to be paying a good amount of money. Look up here on TSly in February, $2.54. Now, what's it priced at? Not priced that high. It was priced when it launched at 24. So I don't imagine it was too much higher. I mean, it would have been under that, paying those kind of distribution. So they're able to successfully do that. They're going from a monthly to the weekly on all of them, and look at all of the ones that they've already been approved for. It's up to them when they launch them. A Russell 2000, a biotech, a fintech, a Nugget for gold. PM's probably be on top of Nugget, the 2X. Semi for semiconductors, tech, China, right? Bonds, 20-year treasuries, Apple, AMD, Amazon, Baba, Coin, Meta, Microsoft, all popular. A lot of Mag 7 and some Chinese and some crypto with Coin on Coinbase. So I expect a lot more out of YieldBoost. Now, let's talk about the strategy, and then I'll show you the comparison, and you can see who the winners are in this. And I'll introduce you to what I call a pretty new, exciting ETF. I mean, it's 6 months old or so, that its NAV is the strongest I've seen of any. And it's paying around 12 or 15% yield, but fabulous holding its NAV, and it's a zero DTE. And I'll talk to you about how they're doing it. They're doing it as covered calls, right? So their calls are only in place for the 6.5 window. They don't get caught in the ups or downs in the pre-market or in the aftermarket. So they can win 22 times in the month. Um, And that can be a negative if the market's going the other way, except for they hold the underlying. So they're kind of writing these very fast covered calls. Now, Roundhill is doing some similar things, but they're not doing any of the synthetics like some of the funds are doing, right? Where they put a synthetic on or they use spreads. They're simply just knocking these things out. So both sides, but let's not talk about that particular fund. Let's talk about YieldMax. We know they hold cash and treasuries. They do a synthetic, right? Buy a call, sell a put. And then additionally for income, for a long time they were selling naked calls only. Then they moved and changed their tactics so they can do a number of things, but typically they're putting on spreads. They're buying calls and then they're selling. Okay, sorry, they're selling calls the way they used to, right? You sell the call, you hope that they expire worthless, and you keep all the premium. And those are a little bit out of the money, usually out about a week. Then they're going very high. So say I write the stock's trading at 240, I sell a 245 and a 250 and a 255 to collect income. Then I go out and buy something like a 265 and say, okay, if it just blows through all these strike prices and I got them, buy them back, and I'm getting killed and it's going to eat a lot of my synthetic profits, then I buy in, I call them insurance. It's the high end part of the spread. I sold a call and then I buy an insurance call at a much higher, same strike price, but at a much higher price. Um, and then you have YieldBoost. There's, they sell puts to create income. But if you think about it, that's very similar um, to other. It's a method that they do over a week or two. And then they also can elect to buy higher price calls for insurance. And they could also buy higher price puts. So all options typically are on a 2x leverage, like in the case of the example. So let's go up here and just do a simple. So Direction has a 2x TSLL, okay, on Tesla. You buy that ETF and it performs 2 times what Tesla does. So they'll come out here and they say the Tesla shares, they're not, but say they're selling they're trading at 100 and you go out and say, well, I want to sell, maybe they're 95, I want to go out and sell some puts at $100. So if this stock is below $100, they're going to put it to me at $100. So I can go out a week to a month. Let's assume that I collect 550 in premium. I sell a put out at 105. The stock's trading at maybe 100 now. And so if it goes, it could be 103. It could be in various places. But I only worry about if it's going to expire below 105 because they're going to put it to me at 105. So I want it to expire above that so I keep all of the premium. Well, at expiration, if it's reached, let's say that you collect it all, if you collect all 550. Well, let's say at expiration you have a price of 104. They're going to put it to you at 105, but that's only $1 loss on the stock. And you now made 450 instead of the 550 premium. So there's some things, but remember, they're doing it on top of the leverage, guys. So it's leverage on leverage. So when they're right, they're going to make a lot more income. When they're wrong, they're going to lose. It's kind of like this MST, right? That's come out from Defiance, and they're using it as an income fund, but it's setting on top of the MST. In that case is using 2x MicroStrategy. They're accomplishing that through swaps. There's a lot of ways to create 2 times leverage. All right, so I'm going to go through this fairly quickly, but hit me up in the comments or whatever, because I want you to see all of this stuff in play. And I've covered and compared some of these other ones, so I really know how to do this pretty well. So here's now unfortunately, or fortunately, they launched this on 12/18. Everything else here has been out a little bit longer. except for this guy, right? So I had a scenario where I had one of the funds that I wanted to compare only has been around since 2019. So it's not completely fair. But what I've done in every other scenario, like down here, I'm going to come back up here. Down here, the newest ones, okay, were 226. This is the 81 day. So I wanted to make everybody the same. I wanted every fund that's been around longer. But when they collect income, I only want to see income that's after 226. So I made everybody relatively the same. So you've got Roundhill XDTE, and some are paying monthly and some are paying weekly. I just add the 4 payments in the month that are paid weekly, and the other guys got it on a monthly basis. So I tried to make it pretty fair. So here's YieldBoost, which has got its SPY fund, but again, it's going to weekly after in June. You got XTTE Roundhill, you've got YieldMax. Okay, that works for them. You've got Tap Alpha, which is a fabulous new fund. Love it, love it, love it. And as CEO, I've listened to an interview, I've listened to him speak on CNBC, I've seen a few things on him. Sai Katara, smart guy, was doing this himself, basically is using a smart AI program to figure out the best calls and says, hey, do you want medium risk? This is your calls to sell. You want a little more risk? This is a call. And it's doing all that searching. He was talking about when he had a business and he sold his business and he had some time and money for his family and they were going to have their first child. He started writing zero DTE options on the spider. Even when he invested, and he was in the tech industry as a CEO of a startup that got bought by Cisco. Um, he was talking about it would take him 3 or 4 hours to go through and figure out which calls to write on a daily basis. He got really good at understanding zero DTE and understanding, the 6.5 hour option life. But, you have to study that to figure out what you really want to put on. And so he built software to do that, thought about selling it as a software as a service, and he went to a bunch of trade shows, and then the trade shows said, well, there's people who loan you the money to start an ETF. Take your software, let the software write it, and then let people buy your ETF. You can make a lot of money that way if you're successful. So he launched it, but really like what the guy had to say, really clarify, since he was an engineer in tech and a CEO, I relate a lot to it. So he's able to explain it in great detail. All right, so that's a great fun. So again, I want the underlying, right? If I've got the underlying at Tesla, so let's go back up here. So everybody's 218 except for the Roundhill single stock fund. And I'll take you through that. So what happens is you've got less distributions. This should not be here. I don't know why. Oh, I was probably just playing around with something, putting it there temporarily. Oh, I know what it was. If TSW had been there longer, the Tesla fund, then this only had one payment. Everybody else had the full benefit. So I was kind of taking the 1 and the 1.6, and I'm going to replace them in here. So like a what if it had been there and a guesstimate. Because right now, it's not performing well enough on the distributions. And look at it. It's outperforming everybody except for the one that's on TSLL, and it has basically only one distribution in February, right? Remember that it's a weekly payer. All these others, whether they're a weekly or a monthly, yeah, they're all monthlies. Well, yeah, they are, because Tesla pays monthly. TSYY pays monthly, but in June is going to be start paying weekly. Kurv pays monthly. So I'm seeing them if they had that scenario. So let's go through the results. All right, let's go across the Teslas. So this one had a price change, what you care about. So what I did was I said, let's just go back a week, and I did some of that. Look who is moving up. I mean, Tesla itself is up, and this prior said, I said a week, but it's a month. So except for this guy up here. All right. Um, so you're up 45%. This one's up 46%. Kudos, right? 28, 24. I think this one should go back to a bigger date. Ignore this for a minute. But your overall gain and loss are actuals, right? It shows what you started at inception. But these guys are all 12, 18 except for this one. So it's got the benefit of having a higher price to start with, but that gets chewed up, but it gets chewed up less than everybody else. So that's interesting. Could be. So that isn't an exact fair comparison. Um, so running all of this out, I still was able to have TSYY, the YieldBoost fund, which has been there that full length, lose the least. Remember, this is through the bear market and through Tesla's bear market in itself. And had, look at this distribution. 70.44. They distributed $7, okay, over 5 payments. Now, some of these other funds already have their Mays. So I went through on TSYY. They haven't had one almost this low. And I just put it out there. It's coming in 3 days. So I said, okay, give them 80 cents. Because it just wouldn't be fair if they had nothing here and everybody else had really a full month. So I gave them 80 cents. I don't, I'll correct that later. And in some fairness, I could drag this up here and see what happens. And it actually would make TSW win if they had this big of it. But they didn't really start way back on their price. So that, I don't know if that's the best way to really do it or not. Okay. I like it when I have like for like. All right. So let's go to the next category of, we've been talking about YieldBoost. We all know about YieldMax. We know about Roundhill. We know about Kurv. We didn't have, so I did have Kurv in here, right? TSLP. And then down here, I got your Roundhill, your Roundhill SPY. I got your YieldBoost SPY. I got your YieldMax SPY. I got this new Tap Alpha. And who else am I missing in there? I could use Defiance. I didn't elect to use them in here. They could have fit in some of this. All right. Well, I'm not. And then I got SPY itself. So when we go through the scenario, we go back prior month, who had the changes percentages. So remember that the one of them I'm limited by is the YieldBoost here. So the YieldBoost only has 81 trading days and started on 226, unlike its Tesla. So I made everybody else match that. No problem in doing that. So we got our inception prices. We can see that the lowest loser, if you want to see, the least NAV erosion is the Tap Alpha, which I kind of came to the conclusion when I studied it and then when I put it into play. Now, look at it from a distro standpoint, very small. So here's your distribution. You really only have 2 months in here because of the time frame. If you're using a 226, you can't really pay in February. And if somebody was ready to pay and others weren't, I left May alone. Roundhill's already paid, right? Because it's a weekly, and everybody else in there. Well, so's SDTY, but others didn't have it, so I didn't want to mix these and have guys pay that other people hadn't paid yet. So when the month's over, I'll fill the weeklies in and I'll fill the monthlies in, and we can just keep moving. Like I said, YieldBoost is going to the weekly. So who won this? Well, the Tap Alpha was only down 1398 when a lot of people were down a lot. Now remember, this gets annualized, guys. You're only 81 in here. So if you drop 10% in your fund in 81 days, you get like a 4.5 multiple to annualize it. So that's why you're seeing a 40s one. And what I did with the math, a couple of ones up here exceeded 100%. Well, you can't lose more than what the value of the fund was. So I made these, I put a formula in here so the most you can take it down is 100%, right? So over 151 days, which is less than half of 365, you had 46 and 44. So you just call these complete losers over here and you take these high distributions, and therefore you still get a negative, but instead of making it red, I wanted to show the winner. So in this case, the winner is TSYY sitting on top of TSLL. And a lot of that simply comes out of its high payout. So you guys that like high payouts, okay, you're going to get it here with TSYY. Just like MST will have high payout, may have a heck of a NAV erosion, but should have high payouts. All right. So continuing on over here, our winner really was this Tap Alpha. I don't think they have a QQQ. I really should have looked longer, but I spent so much time on this that I didn't want to just, dig and dig on that. May be there. Okay, so apologize if it is and I didn't include it. Look at SPY. SPY would have won this, right? Basically, if that's the index, the index is going to be pretty flat. Okay. Although, look at Tesla. I mean, different, right? A single stock. That shows you how beat down Tesla was in this annualized basis, right? It only lost 20%, but it lost 20% over 151 days. All right, guys. So it didn't win. Sometimes they do. And then look here. I got the NDX, NASDAQ 100, or Qs, whatever you want to refer to it as. And I got Roundhill. I forgot who TQQY is, guys. That I didn't put my notes. And I got YieldMax. Oh, it's YieldBoost. So YieldBoost has got these two funds in here, the TSPY and the TQQQY, sitting on top of a 3X, whereas I think this one's only on a 2X. All right, because that's YieldBoost's plan, is to be on top of leveraged ETFs to write their sell their puts, sell their calls, whichever their methodology. All right, so let's take these over, and it's kind of ugly. You got Roundhill. Yeah, everybody's familiar with QDTY from YieldMax when they went with their weeklies on the 0 DTE type of approach. Pretty close, 20 from Roundhill, 27 and 28. I mean, this would round. I'd call that the same. Now, who pays more? Surprisingly, Roundhill, right? Just slightly, 20% to, almost 21% to almost 20%. So not a whole lot of difference there. TQQY got destroyed, paid the most, which you'd expect, but got destroyed on this. And naturally, the index did pretty well. And you can see my payouts here. It's just around these 2 months. So hopefully, guys, this helps point you in other areas. Take a look at this new fund, TS Spy or T Spy. I really like it. From Tap Alpha, and the CEO is Sai Katara. All right, guys, hopefully this gives you, and look a lot more for the rest of these guys coming from YieldBoost. And I think there's some other funds that are going to have some single stock out there. Um, and I expect we're going to see more and more from Roundhill, right, on their single stocks. I need to get something out on that as well. All right, guys, have a great rest of your weekend, your Sunday, and get ready for this week. Again, what are the markets are going to do? Are they going to focus on Moody's downgrade of our last AAA rating, or are they going to focus on all these deals that are being done and let the FOMO go into the market? Well, I guess we'll find out before too long, guys. Monday's coming. All right, and look, I got my estimates out for those of you that want to. I showed what coin, although it's got one more week really to collect, but Pulte in there. I'm not going to tell you other than I'm predicting it sets a new all-time record payout. So go take a look at that video, guys. NVIDIA got a lot of FEBI. There's a lot in there. All the weekly pairs. All right, guys. Bye for now. Again, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Bye for now.